Hi, everyone. I'm so pleased to be here today. My name is Laura Pierpoint. I'm the Managing Director of Trellis Climate. Our focus is on aggregating philanthropic catalytic capital to invest into first-of-a-kind climate projects. We do this for the sorts of projects that need philanthropic catalytic capital to move forward and that will have a very high impact on greenhouse gas reduction and removal. I could not be more excited to be speaking with this group of women. It's not every day that you get to talk about climate finance with 4 women who are incredible in their careers. So with that, we know that we are all that stands between you and lunch, and we're gonna dive right in. So I'm gonna ask each of the panelists to introduce themselves and their organizations, and then we'll dive into some questions on innovative financing. So Shirin, let's start with you.
Does this work? All right. Good morning, afternoon, folks. Glad to be here. I'm Shirin Jamshidi. I'm the Director of Investments in the Asia MENA team within Office of Small Business Financial Services at the U.S. International Development Finance Corporation. Now try saying that 3 times. So DFC is a U.S. government's premier development bank, and we invest internationally, primarily focused on low and lower middle income countries. And with that, we take our value very seriously. And what we have done so far is we look at climate as a very key component of our lens for investments, in which I'll get into later. But we were established in 2020, and under the new sort of agency structure, one of the key factors that we have is equity that we deploy, as well as technical assistance and grant. And the TA side will actually be very key in sort of how we look at the climate space and carbon space. And we have done to date $9.6 billion transactions in mitigation and climate resilience space. Mitigation being the largest part of our investment, 63%. It's over 251 transactions. And where we think our role would be best suited is, and where we come in as a DFI, is we recognize that we're participating in a space that a lot of investors are hesitant to enter in. And so we see that as that catalytic investor to come in, take the risk in this space, and look to various tools that we have to deploy. And then the second aspect is, and we'll get into it more, is we recognize that there are very large transactions that we can participate in, but also there are smaller transactions. Going back to 2 panels ago, where sort of smaller transactions where you need smaller investors coming in, we recognize that there are many opportunities as such, but we won't be able to necessarily engaging those transactions. And so we work with our financial intermediaries to be addressing that, Alma being one of our partners. And then lastly is that we recognize that, again, this being a new space relatively, particularly for investors, our participation sort of provides this stamp of approval that a particular partner, a particular transaction has met international standards and certifications. And so with us coming into a transaction, we're signaling to the market that that partner or that transaction has been validated such that it could be a good opportunity or investment for potential private sector investors. Where we come in is our biggest mandate is to have commercial capital mobilization. So we do not intend to and never want to be replacing private investors. And so we really look to see the way that we can participate would be supporting structures such that private capital would be excited to joining in transactions. With that, I'll pass it over to others.
Great, thanks.
Hi, I'm Annalise Downey. I'm the head of climate consulting at Sylvera. Sylvera is probably best known as a carbon data provider and platform, particularly about a quality signal about different kinds of projects, whether it's a nature-based project, technology-based project. But we also provide data and strategic support, so to help buyers from the strategy setting of their carbon procurement to finding projects, diligencing projects, and then monitoring them as they progress. And so my role specifically is to work with customers, whether it's a public sector customer like the government of Singapore, oil and gas companies, financial institutions, pharmaceutical companies, tech companies, you name it, to help them understand where the data comes from and embed it to their carbon procurement process for wherever they are in that journey.
Hello. Hi, good afternoon. I'm Nicole Pasricha. I'm the head of climate and impact at Alma. And Alma is a global debt platform that has raised about $300 million in committed capital to put towards sustainable development assets. We work in two main asset areas. One is financial inclusion, and the second is climate and carbon. So to give some examples of the types of companies and entrepreneurs that we invest in, for example, we invested in Greenway Appliances, which is a clean cook stove company to deploy cook stoves in Africa. We've also invested in Nidaport SAA, doing ecosystem restoration carbon projects in Argentina, for example, as well as in a company called Oya Group to deploy microloans for women entrepreneurs in 8 markets across Africa. Of course, our role here is on the finance side, but really we act as an intermediary. So we're here to connect capital markets with emerging climate and carbon entrepreneurs. How do we do that? Well, we go to market, try to find investors that are interested in these types of assets, and work with all different kinds of investors, including asset managers. We've worked with DeFi protocols, development finance institutions, and then take those assets and deploy them into the best carbon projects we can find. And on that side of things, we also really need to be a communicator and an educator to kind of work with companies and help them understand what kind of finance is good for them and how they can use it in their business. So we try to be very flexible in our structuring and look for solutions where maybe other investors haven't been able to by being flexible, for example, on the sizes we can offer, starting at very small facilities of from $1 million up to $15 million or $20 million and really grow with the company. Also thinking about the loan structures, what kind of security can we take? Can we be flexible? Can we use carbon projects or carbon assets as security? And how can we really make those things work? Just to give some examples of our role, really is thinking about what is the next financial structure that's going to work best in this market. So that's, why we wanted to be here today to talk about our exciting new vehicle that we've launched with DFC, which is a $63 million debt vehicle specifically to finance sustainable development assets, including climate and carbon projects. And really see how we can bring commercial investors in, which we have done for this vehicle. We can talk about it more. Another innovation we've placed into the market is that Alma is a sponsor of a NASDAQ-listed SPAC, and that SPAC is there to help innovative, sustainable development companies, including in the climate and carbon space, to maybe go public and really start to really generate those types of public investors into the space. So look forward to talking more about it with our panel today.
Hi, everyone. My name's April Allderdice, and I'm the founder and CEO of MicroEnergy Credits. I founded MicroEnergy Credits in 2007 when I was working in women's financial inclusion and energy access. And what I saw then, which is still true today, is that there is enormous low-hanging fruit to achieve carbon emission reductions today by helping low-income communities upgrade to modern energy. And if you want to have a sustainable and long-lasting impact, then the way to do that is by listening to and supporting women. I saw women empowering themselves when I worked in Bangladesh with the Grameen Bank. They were forming solidarity group circles. They were investing in their businesses and their livelihoods. I really saw that empowerment. And I knew that we could create a clean energy intervention that built on the best practices of the women's financial inclusion sector. So that's how we started MicroEnergy Credits. That's where we came from. We are now celebrating reaching over 14 million women who have adopted clean energy through our program. And we are trying to get to 100 million women. So I hope you'll join us on that journey.
This is so great. There's so much in what you all just said that I want to pick up on that is near and dear to my heart. Everything around, making sure we're galvanizing commercial investors and not replacing them, and women's empowerment. There's a lot to dive into here. So let's get started. We're going to talk first about some public-private collaboration in financing, because this is a really key piece of financial innovation. And so Shirin, you kind of started us off talking about this. Let's talk a little bit more about the DFC's role in de-risking climate investments, and specifically how you do that in order to attract commercial investors, particularly in high-risk projects or challenging areas.
Yeah, sure. The way we see our role is really just coming in and meeting our clients where they are, and trying to work with them in how can they be financially stable. Number one, we do have a mandate that projects we engage with, they have to be financially viable. But beyond that is that what is the role that we can take that would bring our private sector investors to this structure. Alma relationship is a very specific one, and also a good example to draw is that we initially started looking at perhaps one of our riskiest tool, which is a subordinated debt participation in the structure. And then when we talked and actually went through a due diligence process, that's when we realized that it's not the tool that would be most viable for our client to attract financial investors. And so we transitioned to guarantee. We're a guarantor on this structure. And so that has been one of the situations and structures where we work with the client, we looked at their needs and their wants, and then look to see how we can structure the transactions. And that's generally the role we take on, is that we don't look to see if something is super risky, we stay away. It's more of like, what are the risks? Are the risks environmental, climate, social, or financial? As we think about climate transactions, there are a lot of aspects around the social and communities impacted by those transactions. And so in that space, we look to see whether we have a technical assistant that can support the client, or we have us being a US government agency, we work with State Department and embassies in a particular country, or USAID, where we can have support that can bring to the transaction. If it's financial, what is the role that we can take that would actually help the client? Is it that the transaction has financial basis, but it lacks the interest from the investors? And so what role can we take in to bring their investors? And so where we also, third, is where we look to see how can we replicate this structure and this partnership. Alma, again, is another great example of where we partnered with them about 3 years ago on a much smaller transaction. We worked with them, we understood their process, we understood their investment strategy, and then we came to almost a 10 times facility structure within the past 3 years. So that's one of the other things that we take into account, is that what we don't want to do is a one-off transaction. And then last thing I mentioned, I alluded to this earlier, is that we do know there are large transactions out there where we should participate, because just the space of carbon seems very sort of unknown to a lot of investors. But on the flip side, there are a lot of small transactions that those clients would not be able to get through DFC's policy requirements, underwriting requirements, the various steps that they have to get through. And where we see our role to be very instrumental is working with financial intermediaries that do have the bandwidth, resources, and understanding of working with those clients and be able to reach them.
That's really great. And so let's pass it to Nicole here. You both have alluded now to this partnership between Alma and the DFC. So Nicole, can you say a little bit more exactly how is this partnership structured, and how is it going to help scale some of these really innovative mechanisms?
Yeah, it's actually one of the key points we think is it's like a super scalable structure or idea. So, bringing in DFC as a guarantor to the facility has really allowed us to capture new commercial investors who maybe haven't been in the carbon or climate space before, which is very exciting because we want them to come in, right? So they're coming in for the first time, whether it's a reinsurance company, alternative asset managers, bringing their capital into the space. And working with DFC to make the vehicle as flexible as possible, in the sense that, we want it to be multi-sector. So it's not just climate and carbon, it's a variety of assets, it's energy, it's carbon, it's financial services. This also helps investors maybe come in because they're not committing to a all all carbon asset class, which is very scary, so it kind of softens the blow a little bit. So they can come in that way. It's also very exciting for us to be able to extend the tenor. So previously, commercial investors were, I think, looking at emerging market debt and trying to kind of keep the tenor as short as possible. But this vehicle is going to allow us to give tenors up to 7 years, which would be amazing for certain types of carbon projects, especially nature-based projects where we need that extra time to see those financial returns. And then I think a structure like this that allows for different kinds of investors to come in. So this structure has space for junior investors, it has mezz, it has senior. So it gives like a lot of flexibility depending on what your organization's risk return profile is. There could be a spot for you in here, right? Because everyone has a different need. So I think it's super scalable, it's super replicable, because you can take this and do it again, and you can tweak the tenor, you can tweak the type of projects, you can decide the geographic focus, you can decide the interest. There's lots of ways you can tweak it. So I think it's going to be a really good example of how we can, like you said, next time do it 10x again, right?
Yeah, I mean, this is exactly what it's all about. I mean, I'm hearing really exciting numbers coming here from Shirin and thinking in my head, we have to 10x and 10x and 10x. And so this is awesome, thinking about bringing in new investors. April, let's talk a little bit about microenergy credits. So microenergy credits has implemented several successful public-private partnerships, including with the government of Sweden. So can you talk a little bit about that and share some of what you've done in Mongolia and India in particular, and how these lead to climate wins?
Absolutely. We worked with the government of Sweden in Mongolia, and when we were first contacted by a women's financial inclusion organization in Mongolia, we were met with households, low-income households surrounding Ulaanbaatar were living in cloth dwellings, and in the winter time, the temperature is about 40 degrees below zero, and the main fuel that people were using is coal. And so the air pollution in Mongolia was one of the worst in the world during the winter time, leading to an epidemic of birth defects and heart disease. And we were able to, we met some of the pensioners that were living in these conditions, and one of the pensioners I met said that she spent 90% of her income on fuel, and she relied on her family members to bring her food. So fuel is so expensive. In fact, we even met households that were, at the beginning of the winter, they would order coal in truckloads. A single family might order 1.5 truckloads of coal for their heating use for the winter. We were able to introduce 2 new products in Mongolia. One was a efficient furnace that reduced the amount of fuel you needed by half, and then one was an efficient housing product, which was a ger blanket, which was insulation, and that also reduced the heating need by 50%. So we were able to significantly reduce their fuel expenditure, as well as completely provide clean air within the yurt, so the children were breathing clean air. And we reduced over 750,000 tons of carbon emissions in Mongolia, while helping these families improve the quality of their lives. And I did get to meet the president of Mongolia as a result of the success of this project, but the person that I met that really impacted me the most was a father who had bought one of these furnaces, and he said, "We always wanted to have clean air. We always wanted to have our children be healthy, but there had never been a product that was affordable to somebody like us." And so these are the voices that really motivate me, because these are the people that can really drive a clean energy transition from the communities through their own desire for a better life. So these are the people that we really want to champion. There was one other, you also asked about India. We also worked with the government of Switzerland in 2013. In India, primarily in the rural areas, most households were using kerosene for lighting. And kerosene is a terrible fuel for lighting. It's crazy in this day and age that people are using it. It's still prevalent in a lot of regions. And even I I met a woman who had been burned. Her husband had thrown the kerosene lantern at her, and things like this just happen. And our program was able to help these women transition to solar lights. They invested in solar lights for their homes, for their businesses. I even met one family. They were so proud because with the solar lighting, their daughters had been able to study, and their daughter was the first girl who had been able to pass the government tests and go to the government high school in the history of their village. So these, yes. Really the pride in their eyes. I will never forget it. And these are the types of changes that we can make. The carbon markets, the government of Switzerland was able to reduce 2 million tons of emissions. We reached 6 million households, and these are the types of success stories and successes that we can create through the voluntary carbon markets now, through carbon credits.
Thanks, April. That's such a powerful reminder of why we do this. It's really important to stay grounded in those pieces, so really appreciate you sharing those stories. I want to change gears a little bit. We've talked about some of what's working, which is awesome, but as we all know, there are challenges in this sector. So let's talk a little bit about some of the things that make financing carbon projects hard, and no discussion of this topic is complete without discussing offtake and revenue in particular. So Annalise, would love to start with you here. Carbon credit mechanisms often face criticism for their low pricing, particularly right now, and this leads to insufficient returns for investors. So can you say a little bit about how platforms like Vera help improve transparency and accountability to make carbon credits more financially viable for investors?
Yeah, so quality was one of it's like a first order problem that you have to solve for. These carbon credits and these carbon projects have to be comparable. You have to be able to make decisions and understand where there are risks that exist between projects. So that's one sort of signal and indicator. Another is price and, of course, supply. If I want this project, how do I procure? How much can I procure for? And I think the market maybe 2 years ago, less than 2 years ago, was very focused on, there were a lot of spot market transactions, and geocontract was sort of thriving, and that was the unit that the market was sort of looking towards. And as the market understood that quality was variable and that two projects did have different sort of risk profiles, people were looking to go sort of upstream and look at pre-issuance projects, or they were sort of looking for project-specific rather than kind of like a bundle. And so when you are thinking about how much should I be paying for this carbon credit, the spot market transactions are a helpful signal, but it's also not necessarily representative of the price that is actually being paid or what a sort of credit is worth in projects that are developing, projects that are high quality, projects that have sort of heard the integrity questions being called, understanding that, okay, I have to demonstrate to my investors and my buyers that this unit is actually representative of a unit of carbon, and that I have accounted for and mitigated risks. So I think having a variety of pricing signals available helps investors and buyers make better decisions, but it's what we were talking about before in the panel is you can't show up to a transaction with this is how it's going to be done. It's a conversation, it's like a commercial structure that works for both sides, and a sort of a pricing conversation that works for the conditions of the project.
Yeah, that makes a lot of sense, particularly right now as we're all kind of collectively figuring this out. So Shirin, in the context of the DFC, one of the things that we see is that a lot of climate projects don't necessarily have particularly high internal rates of return. Sometimes it's as low as 8% over 40 years. So how does the DFC think about this? How do you think about offtake contracts? How do you think about IRRs? And are there mechanisms you have that can kind of support some of these sides of the equation?
Sure. So on IRR side, on the sort of the transactions that we look at on the smaller scale, and Nicole alluded to this, is that we look to make sure that aside from the credit pricing, the project itself has other assets and other means of generating income. And so we don't just look to the carbon to be the only source of income. It's an added benefit. factor. And we recognize that smaller transactions tend to be a lot more taking the shock of market volatility. So in that respect, that's a key part of us when we look at transactions. On the much larger scale transactions, and we've done this with investments in Amazon forest and investments in Indonesia, we do look at the offtake contracts, and those being the larger corporations as a means for security. Recognizing that those companies tend to uphold their end of the bargain, and then if they're signing up for something, they're willing to stay in and commit to that project. So that sort of is how we distinguish between the smaller transactions and the viability of those transactions and the larger transactions. And then second to that is we recognize that these transactions could potentially have smaller returns. Not always, but it's a possibility. And so we don't necessarily think that we should be encouraging an investor that's not looking for an 8% IRR to come into that. That's just not the class of investors that's going to be interested in that. And so what is going to be our role to support a transaction for investors that are looking for an 8% IRR so that they would actually be comfortable coming into that? So it's also recognizing that not every transaction is meant for every investor, and just, again, meeting the client, meeting the investor where they are, and facilitating, structuring transactions that could meet those needs, financial needs. So that sort of is our view generally on those transactions and structures.
That's helpful. And Nicole, how about on the Alma perspective? Can you dig in a little bit more on kind of the financial investor side of this? Like, what are they looking for? How do they think about sustainability and returns?
Yeah.
How do we cross this bridge?
Yeah, I mean, it's an extension of what Shirin was saying. So, of course, like, over the past 18 months, I would say our team has looked at over 100 different projects that we're looking for financing at different stages, from early to mid-level stage. And of course, we look at the environmental and social returns as well as the financial returns. And on a balance, if I think about those 100 projects, I would say 80 of them probably had like a pretty clear description or model for what the environmental outcomes were going to be, right? But then on the finance side, I would say maybe like closer to 20 or 30% had really a model that was based on very clear assumptions and non-optimistic pricing 10 to 12 to 15 years from now that would allow us to really take a financial decision. So that's the first thing, is like coming in with the right information up front, right? But then the second thing is like, it's exactly what you were saying about meeting the client where they are. So we have to also meet the entrepreneur where they are. So the entrepreneur is where? The entrepreneur needs finance. Where are they in their journey? Have they been thinking about all the different financial solutions that are available to them? Debt is just one instrument, right? What about equity? What about pre-purchase agreements? Do they have those discussions? Have they built their model to be able to figure out what is the right combination of finance that they need, right? So like, for example, if someone comes and is like, I need debt right now, I need a bridge loan today. Okay, that's okay, but like, let's just take the conversation back a minute. You need debt right now because you need cash flow, or you have a short-term need. But what does your company, this, for example, reforestation company, needs debt, short-term debt today, but in the next 5 years, where are you guys going? How much land are you going to have? How many carbon credits are you going to be issuing? Let's look at the whole picture together, and let's see where debt fits in, and let's have conversations with other types of financiers to see where they could come in. So that's the second piece of the puzzle. One is meeting the project where they are, but the second is like, we have to also have those conversations with the buyers, with the equity investors, to understand what they need. And I think that's maybe the missing piece right now, is like a lot of us are sort of interacting on a one-to-one basis with the client, when really we need to have a bit of a joint approach. Because if I don't know where you're coming from as a buyer, or I see a purchase agreement that's written, but it doesn't make sense to me, the purchase agreement, in the sense that I don't think it's maybe beneficial to the project, the terms and conditions don't allow me to lend against that specific purchase agreement, then it's not going to work, right? It would be better if the buyer said to me, hey, we want to make a purchase agreement. Does this language work? In order that you could raise money, right? So It's kind of like those three-way conversations to happen would be fantastic. And especially having that longer term vision. So if you are working with developers or if you are a project developer, just really remember that your finances are here for you. We want to understand your vision. We want to understand your long-term plan. We're not just here for like a short-term transaction with you. We can provide that, but it's probably not the most beneficial thing even for you. And so we're here to have those conversations. And when I said we've looked at 100 transactions, that we talked to 100 developers about their projects. We didn't finance them all, but we gave them advice or we directed them to someone else. So every conversation is beneficial. Just remember, you can come, you can talk to us, and we want to develop a structure that's going to work for you, right?
Yeah. Go ahead, Shirin, you had something you wanted to add.
There was one more thing I was going to mention, and this is sometimes a downfall of working with the US government as well, and that is about 2.5 years ago, government of Indonesia decided to make some decisions about carbon market, making transactions in Indonesia a little bit unpredictable for their pricing. And so when we engaged with clients that did have investment in Indonesia, we had a transaction that was a fund that was going to invest on small-scale businesses in the agriculture and forestry space. We had to be sort of cautious as to how we're engaging and discussing this transaction, because the last thing we need as a government agency to make another government upset that we're coming into the country and forcing our principles and beliefs into what they should be thinking about their markets. And so that's another sort of a factor for us when we think about our participation and how we are participating into a transaction, number one, and number two, how do we discuss about the transaction, engage, and otherwise is really making sure that because we're a government agency, we're not making life more difficult for our clients in a particular country.
Yeah, thanks for that really important point about the global nature here. Okay, one last question on this topic for Annalise, and Nicole mentioned this a little bit about pre-issuance of credits, and so can you talk a little bit about that, this idea that corporations are buying credits even before projects are being built? Talk about this trend. What do you think about whether it will persist?
Yeah, I think buyers are and investors are diversifying their procurement approaches. As I mentioned earlier, a lot 2 years ago was happening in the spot market. And you face different kinds of risk exposure if that is your pathway to procurement. So people are looking to diversify how they find and invest in projects. And so given the kind of quality constraint with the market, people have this understanding of, okay, 2030, yes, but every year after that, I also have to procure these credits, and I want to have control over the quality of the projects that are coming online, the projects that make it into my portfolio. And so when you start to look at a project that is earlier in its life cycle, there are different risks that manifest. It's not just about quality, it's also about, okay, how is this project going to progress to meet its different milestones? Does it have a project design document? When is the first sort of planting going to occur? What are the key activities that are associated with this project going through to a successful and sort of high quality issuance? And so, again, to have a broader access to projects, to have higher control of the quality that makes it into the project in their portfolio, buyers and investors are looking to these early stage projects to invest. And so there are the quality criteria that they need to consider and that they want to have data for, but it's also about, again, the delivery risk. So are these projects going to deliver at the quality and at the volumes that I need? And so Sylvera's approach is to have not only a view on the quality of the project and the uncertainty associated with the kind of development, but it's also a decision-making tool and a conversation starter. So if you are a supplier as well as an investor, the detailed assessment that comes along with the project is giving you information about what kind of actions you can take next to be able to reduce this risk. How should you be thinking about this as a tool to build into your milestone-based payments if that's a pathway that you are looking to go? So it's a sort of a newer endeavor, but it's the same kind of fundamental principles of risk and quality and providing data at a sort of a regular cadence. So imagine you're a corporate buyer, you have, let's say, 10 projects in your portfolio. You probably work with, let's say, 7 different suppliers. That's a lot of people to go back and forth to make this kind of data request. So really streamlining the process so you have the data that you need to report against a loan or to report against a sort of a key milestone with the registry so that you can receive that payment.
Okay, thanks for that. So I had 5 minutes remaining on the clock here, and now I have 0 immediately. So I think we are being told that we need to go get everyone fed for lunch. But before we do that, I just want to do one last rapid fire round for each of you. And you get to pick one of 2 questions or both to answer very briefly. The first one is about women's empowerment. And April, you've already given us some really powerful examples of how these kinds of goals can be included in the things that we're doing. So say a little bit about that and how you all are building women's empowerment into your work, or what you think is the #1 most innovative thing that we will do or need to do in order to close the gap on these really key climate projects. So April, we'll start with you.
All right. Well, I'm going to pick women's empowerment, of course. MicroEnergy credits, we learned 3 principles from women's financial inclusion. One is that we have to empower local leaders. A second is that we have to have continuous communication and listening, really listening to the women. And the third is that we need to be dynamic and evolve our programs. And so at MEC, our largest budget category are women demonstrators. In the local communities, we have over 10,000 of them, and we are growing. With the monitoring, our groups are meeting once every 2 weeks to discuss their clean energy products. This is completely different from a program where somebody just dumps a container of cook stoves, right? We are empowering these women and listening to them every 2 weeks. They're always telling us surprising things. And then the third one is evolving with our clients. We started out working with improved biomass cook stoves. Now we are evolving with the same clients into induction cooking. Many of our clients have bought 4 products with us: cook stoves, solar lights, efficient water purifiers, and now moving into induction. So it's a long-term 17-year partnership. Many of these clients work within their financial circles for their whole lives. And so this is the type of deep-rooted long-term partnership that can really create a lot of social impact. So thank you.
Awesome. Nicole, go for it.
Thanks. I guess I'll quickly touch on both. So with respect to women's empowerment, actually the new vehicle that we've launched with DFC, can talk about it, Shirin, but it's a 2x gender transaction, which means that the entire transaction and all of the deals we do need to have a women's empowerment impact as well as a sustainable development impact, whether it's financial services or climate. So that means we're screening all of our projects for how they impact women, whether at an ownership or leadership level, employment, or part of the community or customer. So that's super exciting, and we're looking forward to working with, particularly on the carbon side. I think it's going to be innovative to see how projects can actually meet these type of criteria, because often when you're working with the community, it's a little bit harder to quantify the benefits for women, and I think this might actually help people to put some focus on it, because it's a requirement of our agreement with DFC, and it's a requirement of our loan agreement with our borrowers. So it's not something we're going to be able to get around at this point. And then secondly, on the innovation side, I mean, we're super excited about launching the new vehicle. We're super excited about launching the SPAC on NASDAQ and kind of seeing where are the companies that are getting to that point in their revenue and fundraising requirement where they're looking, they're ready for the public market. So how can we get a carbon company on the public markets? Let's talk about that after this if you guys want. And then maybe lastly, Thomas was up here earlier from NASDAQ. I think he mentioned, treating some of these transactions like a bond. And we think there's also maybe some appetite for some of these traditional instruments, like maybe a carbon bond ASAP. So that's what I'll say.
Love it. All right, Annalise.
I'm not sure if it's an innovation, but I think specialization and focus in the market is the key to help it scale. Not everyone can be an expert across 18 different project types, and so sort of lowering the barrier to entry so that people who don't have a carbon market background can participate, and so that we can have more buyers and investors in the market.
I would say on the innovation side, we're not known to be supporting innovation. We're a government agency.
Don't be hard on yourself.
A little bit.
Come on.
On the technology side, I would say. But we do have a technical assistant tool that if there's a company that sort of is just around the cusp to get to be financially viable and they need some assistance and support to get to that point, we are more than willing to work with them. On the women empowerment side, what I would say is, as Nicole alluded to, we're part of a 2X Global Challenge. We're a sponsor and one of the members of the institution. Within that, it's great to hear all these stories on the ground with women and communities. But what we also are looking at, and Alma did pass that test for us, is the financial intermediaries we're working with. How are they empowering their management, women management staff? And what are they providing to ensure that there is women retention, women staff support, and so that we're not just talking about these like really good stories of village stories, but that these formal institutions, how are they playing a role in this space? So from that aspect, we take that very seriously.
That is a fantastic note to end on. I want to thank all of you in the audience for being here today. I want to thank Flow Carbon for having us. And most importantly, everyone, please join me in thanking these incredible panelists. It's such an honor to talk to you all today.